Okay, very good evening to traders. Mark here from Day Trading Room. Okay, market is still chugging, but we have just had the cash bell. But I want to just talk about this quickly. Just waiting for Google as well. So if I go quiet, I'll just cut it off and come back on in a second. It looks like they're out actually on Google. Just flicking around. But anyway, what I want to talk about is, first of all, live room. HIP, great discipline today. You know, those of you guys who weren't there, those who were there will know exactly what he did. Those of you who weren't there, let me tell you, he had a couple of stop outs, and he reduced his size, and he had a winning trade, and he had one more loser. And as part of his business plan, he said, "You know, I'm not going to trade anymore today." So he didn't trade his account anymore. He continued to call out things he saw, and he saw some great things. You know, later in the afternoon down move, we got a really good down move after that unfortunate news of the airline crash. But you know, that's just such a professional way of approaching it, and you know, this is the sort of thing that you know, makes you last a long time in this game, and it just shows, you know, the difference between people who've been in it for a long time and newer traders. And if it's something that you do, you don't stick to your rules, then you know, come into the room, you know, and just see exactly how a trader, you know, sticks to his rules and his discipline. Because at the end of the day, the profits will come. If you stick to your rules and your discipline, the profits will come. Okay, I want to talk about this specific price pattern, which we saw really not very long ago at all. It's 1 minute chart now, and it's 9:10 UK time, so 10 minutes after the cash bell, 4 minutes until the futures close. And this is what I think is very important. Okay, let me just give you a little look to see. If you weren't here, you can see, put it into perspective. If you weren't, sorry, watching the day's trading, put it in perspective. You know, we pushed up above the prior day's high, and then we came down, pushed through the prior day's low, back up again, and then back to the gap, and then sold right off, and then we're coming right off into the close here. We still had about an hour, 45 minutes to go, but this is the real key point I want to talk about, and this is what price action is all about. This is what's reading. Forget about all this stuff. There's loads of setups in the rest of that, but I'm not going to talk about those. I want to talk about this specifically and why this is important. As we drove down to lows here, look at the market pen out. As we drove down to lows here, see this specific candle here gives us a nice low tick reading, good volume as well. So that's a lot of sell orders battering that bid. You've got the NYSE ticks at lows, you've got volume, you've got everything you need for good downside action. You know, ticking a lot of boxes, a lot of green flags there. Okay, and then subsequently you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, or whatever it was, 8 and 9 minutes up to this point here. Okay, well, you're not getting above that 1 minute candle move. Okay, now put that into perspective and think about that for a second. That one move down, we couldn't get back above it within 10 minutes of people stopping, assessing, looking at where we are on a bigger picture, and having all the time in the world to make their decisions, you know, long or short, taking some off the table or not, whatever the case may be. And we still can't get above there. You know, you have to pay attention to that, because that is telling you something. That is pure price action that's telling you, listen, there is still a huge overhang of supply. Now, okay, we had a buyer sitting there at 32, and we were looking at him in the room saying he's going to get pounded, and he was getting hit, and we still had algos that were popping off the low, you know. But ultimately, when you've got that overhang of supply, and you can't get above a 1 minute bar move that drove us right down to that point there in 9 or 10 or 8 or 9 minutes, whatever it was, you've got to pay attention to it. You've got to sit up and notice it. And the likelihood is that there is still supply in there, and unless we get extreme demand coming in that takes us above that high, you know, you can assume we're going to take out that low again. And that's exactly what happened. And even if not, it's a great way of framing your trade. You can say, look, I can put my stop above there, I can work off it. If we pop and then start to roll again, you can take it however you feel comfortable. You know, if you prefer to take the break of the low, fine, you're okay, you've got plenty in that. If you prefer to be scaling into it or taking it as we pop up, using a tighter stop, fine. Plenty of ways to operate that trade, plenty of ways to work with it, whatever suits you. But what I just wanted to point out quickly on this video was the importance of things like that, keeping your eyes out for things like that. And then secondly, you know, 32 here, you can see big buyers, and I won't put the chart up, but that was Tuesday's low of this week. Whatever reason, you know, people are buying there. It doesn't matter, don't care, but there are buyers there. When we broke through it, it broke down. You know, it was very relentless selling. People sitting at lows, people sitting at lows. It popped back up, and just think, right? We had all those algos buying at 32s, buying at 32s. A lot of inventory they were stuck with at 32. Okay, even if it was an algo, even if it was just short-term traders, whatever, buying at 32, as you get a good stretch away, almost 30 ticks, well, 30 ticks away from that buying price, it shoots straight back up. They are thinking, thank you very much, what a gift. The chances are there's going to be a lot of supply back at 32. I know it's a textbook thing. I know the textbook is, you know, once support breaks, it becomes resistance. And yes, that's the reason why. But if you think about the reason behind it, it starts to make sense. A lot of people buying at 32, and then if they're stuck with that, let's say an algo was buying the low and it's popping up, buying the low, popping up, buying the low, popping up, and then all of a sudden it rolls over, and he's buying new lows, buying new lows. He's got a lot of inventory that he's got to get rid of. So as it pops up to 32, that's the first place he's going to start to get rid of it. Now, of course, we can't just blast to the upside. That's why you use stops, of course, in your trading. You know, nothing's clear cut, but it's a good place to look at your tape, look at what's going on, see who's sitting there, see what's happening, and you know, maybe take a little trade for a little sneaky short back to lows, and in that case it works. Some days you're going to get stopped, but you know, if you can quantify your risk, if you can make your targets much more than you're risking, and if it makes sense to you, and if it makes sense to what you're doing rather than just a pretty pattern on a chart, then things can work. And of course we've got this pop late, just so, and actually, you know, I don't know for certain, but assuming there was a lot of algos with inventory stuck around here and lower, they managed to get some out of 32, but a little pop on reasonably low volume, just getting it above here allows them to just sell into that 45. We talked about the 45 level in the room. It just popped up to 50 and rolled back down again to the 32. So even in that short space of time, we haven't had volatility and volume coming through for a while, but you can see how you can start to put a little picture together. You can start to think who's doing what, think of your game in theory, why the levels are important, what's going to happen when we touch them, what's going to happen when we break them, what's the next likely move, and you can start to position yourself accordingly. Okay, so good trading, guys. Had a great trading day. Looking forward to more action. If we don't get it tomorrow, then hopefully we'll get some in the next week. If you haven't been in the room taking a trial, please come and have a look. Daytradingroom.com. Go to the live trading room tab, check it out there, and fill out the free trial. Put your email, name, address, name and email address in, and it will automatically send you the link for login. Come and have a look. If it's for you, great. If it's not, no worries. Okay, good trading. Take care. Speak to you soon.